Welcome to today's webinar on why cybersecurity insurance is so costly and sometimes hard to get. My name is Mark Levine and I'm the Deputy Director of the New York State Association of Counties. Thank you for taking the time out of your busy schedule to participate in this important webinar discussing the challenges of securing cost-effective insurance coverage for cybersecurity. This webinar is the first of a series of cybersecurity webinars being co-sponsored by NYSAC, NICOM, the Association of Towns, and the New York Municipal Insurance Reciprocal, NYMER. These webinars are designed to build off of the Cybersecurity Primer for Local Government Leaders published by the associations earlier this year. All of these are developed to raise the level of awareness of cybersecurity issues for non-technical local government leaders. The next webinar is being hosted by NYMER and will focus on the risks associated with social engineering. It will be held next week on September 18th. On today's webinar, from 2020 to present, ransomware increased in frequency and severity, resulting in significant cyber insurance claims. Even if these claims weren't local government incidents, insurers have modified their overall cybersecurity underwriting guidelines to raise premiums, lower or modify coverage terms, and demand that insureds, local governments in this case, attest to risk-reducing solutions and activities. This webinar explains the trends and forecasts in the cybersecurity insurance marketplace that are driving the price and challenges for local governments. Before we get started, I would like to turn the mic over to NYSAC Director of Education and Training, Jeanette Stanziano, for a few words about housekeeping in today's webinar.
Thank you, Mark. Good morning, everyone. Just a few items to remember during the webinar. We encourage everyone to feel free to submit questions throughout the program. We ask you to do so in writing via your webinar dashboard. Simply click on the questions tab, type in your question, and we will get to it at the end of the program after the presentation. We will have a Q&A portion of the program at the very end where we will address all questions that we can answer live. Any questions that we can't answer live, we will follow up with you with an email with an answer. We're also recording this program, as we always do, and the recording and a PDF of the slide deck will be available on the NYSAC website under archived webinars. Just look for today's date. I'll also be providing copies of the recording to our co-sponsors, the Association of Towns, NYMER, and NICOM, and I'm sure that they will be able to provide those as well for all members. I think that's about it. Mark, back to you.
Thank you, Jeanette. Our speaker for today is Kevin Crawford, the Executive Director for the New York Municipal Insurance Reciprocal. NYMER was created by NYSAC, NICOM, and the Association of Towns in 1993 to provide property and casualty insurance for New York's local governments at a time when it was difficult for municipalities to get affordable and responsible insurance coverage. When NYMER was created, Kevin Crawford was the General Counsel at the Association of Towns and has been an integral part of the insurance company since its inception. He became the NYMER Executive Director in the early 2000s and has seen firsthand the many challenges facing the municipal insurance market, with the most recent challenge being getting adequate cybersecurity insurance for local governments. Kevin, thank you for being with us today and kicking off this timely and informative cybersecurity webinar series.
Thanks, Mark. Thanks, Jeanette, and good morning, everyone. So I'm just going to go through a series of slides, and Jeanette will help me move through them, and then hopefully we can have some good questions and conversation at the end. As Mark already mentioned, a little bit about who NYMER is and our relationship with NYSAC, as well as the other two associations. We now are 940 counties, city, towns, and villages all across New York State. And we do property and casualty only. So we hope that by understanding the nature of the risks that reside in all local government operations, we've been able to do a better job of providing the necessary insurance so that those services could continue, and that the pricing of that insurance is predictable, stable, and can be accommodated in a municipal budget. We've been pretty successful at that throughout our history, which will be 30 years next year. Around 2015, we began offering cyber as an endorsement to our general liability policy. So before then, we knew as little about cyber as anyone else, but we started to see the stories popping up about these events happening, mostly in the business sector initially, but then it began to affect local government. And so our board decided we had to get in the game and provide some sort of cyber protection to our members. And our board is, I should mention, 13 county, city, town, and village elected or appointed management officials. So they see this firsthand in their own governments, and then they bring it to NYMER and they ask us, let's figure out a way to provide this protection. And we began doing that in 2015. Next slide, Jeanette, please. When we started, we only offered $50,000 in protection to a county as a first party, and $100,000 if there was some sort of third party ramification to the release of data or a ransom event. So as you can see, very low limits at first. We started with a questionnaire that we developed with the Center for Internet Security because our board understood that we weren't comfortable with the risk. We were trying to figure out what our members actually had out there. We probably didn't even know most of the terminology, what an endpoint was. We weren't sure what types of protections were available and in place at many of our members. And so before we started in this line of coverage, we had a questionnaire that we put out to our members before we would even offer this limited type of coverage. Next slide, Jeanette. It was very low cost. It cost a couple of $100. Very low cost initially. And there was actually very little interest amongst our membership. Only 1 in 6 of our members even were interested or purchased the coverage, even though it was at a very low cost. Now over half our members have it, and more every day each year are seeing the need for it and are filling out the questionnaire and are purchasing the coverage. The interesting thing, for a couple of years, we had no claims. So whoever was out there and these things that were happening around the world or throughout our country did not arrive in New York, or at least did not arrive on the doorstep of local governments in New York State. So for the first couple of years, there were no claims. Life was good. Very low amount of premium collected, but not a lot of activity. And so our reinsurance relationships were able to accommodate that very comfortably. Next slide, please, Jeanette. So with that experience in place, we decided we could afford to expand our limits. And we started offering in 2018 $250,000 for anyone who purchased it. And you could buy additional limits up to $1 million. And we did this, again, with premiums very, very low. So you went from 50,000 to 250,000 and probably saw no increase in premium. 5 times the coverage, same pricing. And the premiums, if you went up to $1 million, probably started approaching $1,000. So as you can see, in an overall county budget, and certainly within your insurance budget, the cyber piece was a very, very small slice. But then things started to change in 2019. And it really started to change because of what was going on in the reinsurance market. So let me just take a minute to explain what I mean by reinsurance. In our program, and in fact, most insurance programs and large insurance companies, they look to spread the risk that they underwrite. And we certainly do that in NYMER. We buy a lot of reinsurance because even though we're one of the largest pools in the country, we're still a relatively small insurance program when you compare us to a Travelers or a Hartford or any of those big names you've heard about. And so we keep some of the low risk at the low end, but then we purchase reinsurance to protect our program from some sort of a catastrophic event. We do that on the property side, which was very important when we went through events like Irene and Lee, any of those types of weather catastrophic events. We also do it on the liability side. And then, so what happened in 2019, because a lot of these cyber events and ransom events were starting to happen all over the world throughout industry and to local governments and school districts and hospital systems, etc., the reinsurance cost started to increase dramatically. They doubled in 2019. And that's reflected the fact that the first claims were starting to arrive, particularly in the local government sector. There were some of the events, Atlanta, Georgia, Greenville, Baltimore, Maryland, multi-million-dollar events where systems were paralyzed for weeks, if not months at a time. And so all of a sudden there was a realization that the public sector was going to be a target for these types of ransom events. And we were reading about it on the front page of our papers. Next slide, please. We saw events like what happened in Florida, where it wasn't simply not a ransom event, but now these hackers were getting into our systems and able to do, in this case, they adjusted the levels of sodium hydroxide going into the water system. Well, that's a paralyzing event to an insurer who's starting to think about what the impact could be for all of those who are users of that water treatment system. All right, so it wasn't just the government itself, but it was all of the users of the service, of the water, of the sewer systems. And so there started to be great concern about what is really the exposure that we are insuring. If this could happen in Florida, it could happen anywhere. Fortunately, in that case, the operator was actually sitting there when all of a sudden his dial started going crazy and he was able to take it over manually. And so the damage was limited. But what if that wasn't the case? So a lot of concern amongst those who were providing the necessary reinsurance to a program like ours, or really reinsurers who are taking on some of the risk that anyone else that was writing cyber individually did. And so they started to reduce the amount of capacity and limit they were offering. And that happened to NYMER in June of 21. So just a little more than a year ago, our long-term reinsurer partner shrank the capacity they were offering us from 20 million a year to 5 million. And they told us then, and we're leaving the business entirely the following year. We're just not comfortable with the risk. We don't feel we have an understanding of it. And so we are going to leave next year. We'll give you 1 year. And in the meantime, as a program, we had up to 20 million of events that would have been protected by the reinsurer. They reduced our program to 5 million. And then June of this year, 0. And they carried through on that. And so this little misnomer in the bottom of the slide, NYMER was out to market. We looked everywhere to see what we could find to replace this essential reinsurance protective layer for our program. Next slide. So in this very uncertain future, our board discussed it and committed to the line of coverage. They said, we got to do whatever we can to stay in the business of providing cyber to our membership. We were successful with doing that. We found only one market. We went everywhere, all over the world, looking for this reinsurance protection. We found one market, which is Beasley, who has been a cyber underwriter for a long time, but our cost doubled in 1 year, even though we've only had a couple of claims. And those claims did not get up into the reinsurance layer. They were within our retention per claim. We retain now $150,000 of each claim. And so they're only there to protect us if the cost of the claim go higher. We've never had that event in our 7 years history of writing cyber. And yet, for the limit, our cost doubled. And who knows what's going to happen going forward. As we're talking this morning, I can't be comfortable in saying we have any sense of where those costs are going to go next year. A lot will depend on what happens during the course of this year. So far, we've had one event, less than $50,000. It was a village, and fortunately, the cost of them getting them back up and operating were very low. So we have continued with extensive underwriting, and I'm sure those of you who are getting your cyber protection from other markets than NYMER, you're running into this. We have first of all, short form application, which if you decide to go forward, is followed up with an extensive questionnaire. Excuse me. And those are not going away soon. Everybody is now trying to get a better sense and a better feel for the risk. And they understand that what's happening in one county may not be the case in another county. So they're looking at each of you individually. And that's a challenge for a program like ours because we have great variety in terms of size and class of local government. So that's a challenge for reinsurance for a program like us. But you're going to run into that no matter where you're going. A lot more extensive underwriting and questions as we move forward. They want to understand what's going on in your county before they agree to underwrite that risk. So in our program, we still offer 4 levels of limit, but $1 million is the maximum. Since we can't get reinsurance beyond $1 million, that's all that we can offer in the program. And I certainly understand that there are many, if not most counties who would like more limit than we can offer currently. But again, it's our reinsurance treaty that limits us in that regard. We also have 3 risk categories depending upon your answers to the questions. You may be considered a low risk, which is actually most of our members, medium or high. So there could be an adjustment in your premium depending on how those questions are answered and just what kind of protections and expertise, we use the term IT hygiene, is in place in your government. And now our premiums are running from about $3,000 to $9,000, and they're going up. So as you can see, we started out at a couple of $100, and now we're approaching $10,000. And it's probably going to go higher, especially if we start to have claims. But in the meantime, we're just covering our reinsurance costs with those increased premiums. Next slide, please. When we first got into it, this was just the way we covered it. It was an endorsement to our general liability policy. We've now developed a standalone cyber policy. And in fact, with our new relationship with cyber, with Beasley, we are now substituting the Beasley policy for ours. They were very similar in most respects, but now amongst all your various policies, you're now going to have a standalone cyber policy. And these are the areas that it's going to cover. Breach mitigation expenses. So you've got possibly public relations services expenses, call center, legal fees, notification costs, etc. And those are sublimited in our policy and in many of the others now. This is also new to cyber. is sublimits are now being brought in these various areas within the policy. Next slide, please. Network information security liability, which will cover unauthorized access, potential unauthorized access, unintentional data compromise. For instance, the event that happened with the Internal Revenue Service that was reported yesterday, where they released, 120,000 filings in the charitable area. Again, unintentional, but if it can happen in the IRS, it can happen anywhere. I guess that is the message, that is the experience. And again, you've got defense expenses included there. Next slide, Jeanette. Sort of the third category. There was a third one there, so if you look at the deck later, you'll see it. But these are the major categories, the language and terminology that is used, a lot of them subject to individual sublimits, most particularly I'll point out for the ransom. So we now have a sublimit in our program for the actual ransom payment should you get in a situation where you feel you have to pay it. Now, oftentimes the hackers will actually know the coverage you have, and they may be willing to live within whatever your limits are, although certainly the FBI and many others will encourage you not to pay the ransom. It is a covered element in the program, subject to a sublimit. I wanted to just take a minute and take us back to January of 2020. So as I mentioned, in our program, we've had just a couple of claims. We had increased what we were offering, keeping our costs under control. And then we started to see these events hitting municipalities, fortunately outside of the NYMER program, and in most cases outside of New York State. I happened to attend a event, a Cybersecurity Summit, excellent program put on by Dutchess County down at Marist College. Excuse me. At the end of the program, town supervisor, one of ours, stood up and said, "Well, you've scared the daylights out of me. What am I supposed to do when I go back to my town? I have a town board meeting tonight. What can we do? What are we supposed to do? I'm not an IT expert. We don't have anybody in-house who is, but everything you've told me has sort of frightened me. What is the first thing that I should do?" And the concluding panel said, the first thing you should do is go buy insurance. Transfer the problem, and it's their problem and not your problem, and you're protected. And I'm sitting there as the insurer thinking, oh boy. I'm really the target. Our program is the target if that's the only answer out there. At that time, it was relatively easy to procure the insurance. It was not too expensive because a lot of the insurers were interested in getting into this. Is a new market. They knew there's a new market, could be a growing market. They didn't want to miss it. So everybody was offering it, and they were offering it at pricing that was fairly reasonable and could be accommodated. This was January of 2020, so just 2.5 years ago. But from that moment on, things started to change dramatically because the insurers, just like I was, and sitting there that day, realized that they didn't really have an understanding of what they were buying. What is the risk that we are now assuming on the part of our clients, our local government clients? Next slide, please. So that was a moment, I think, that happened in the offices of every insurer that writes the public sector. It certainly did in ours. And so it has meant a couple of things. In the short term, insurers will continue to ask more questions. And I know to the extent you're involved in that insurance procurement or exploration in your county, you've already seen this. The questionnaires now are 25 and 30 pages long, as opposed to a half a page or 1 page. And that's probably going to continue until they feel they have an understanding of what risk you're presenting with the various programs and services you have, and with the IT expertise you have, and whatever kind of security you've been able to obtain and maintain. That's what they're trying to get their arms around. They're going to require more risk management, okay? Multi-factor, on and on and on, encryption. I think that'll be a growing area. There's just going to be more risk management. We're going to have to focus on that. Just as we risk manage our recreation facilities and our jails and all of that, we're going to have to do that in this cyber area in ways and to an extent that we've never had to do that in the past. And even with both of those things going on, premiums are going to continue to increase and coverage is going to be limited. It's just the same pattern that went on when we got into the environmental area, terrorism, virus, all of these new areas of exposure and risk. The initial reaction is to raise pricing, limit coverage, in some cases, leave the area until they're more comfortable with what the true risk is. These are the things that are happening now in the short term. Next slide, please. So in the longer term, I think both companies and US local governments are going to have to come around to the idea that the intangible assets represented by our IT systems are, a great value that we need to protect, and there's going to be a cost associated with that. So we know it's not just looking at the county building or the jail or the recreation facility or all of that more visible assets of the county government, but now we're going to have to look at our intangible assets, particularly the software and the programs that allow us to deliver service to our members. There's a great value to that. It's something we need up and running every day. And that's going to, sort of an attitudinal change that I think is already underway and will continue. Cyber premiums probably going to grow. I say here exponentially. It's certainly been the case for the last 2 years. Will probably continue going forward, at least for a while, until the insurers and the reinsurers figure out their exposures and what kind of an appetite and capacity they have for offering those types of and levels of protection. So it's a dynamic market. Some would say it's a chaotic market, and I think that's probably both are fair characterizations. And that's a particular problem for inflexible local government budgets, right? I mean, it just is hard to, we have all of a sudden this new category or something that used to cost 200 and now it's 20,000 over 2 or 3 years. Municipal budgets don't work in that fashion, as you know better than anyone. And so that's really a problem. It's really why NYMER came into existence in the first place, was to try to provide some stability and predictability to property and casualty insurance generally. Well, this is now an element of that. And again, quite a chaotic scene right now, and hopefully one that will start to quiet down as we move forward. Next slide, please. Here's particular concerns that we've identified. The connectivity of local government systems. I mean, we're all connected, and there's a heavy use of third-party vendors. I think that's true at all levels of local government, maybe even more so to the smaller units, but they're using third-party vendors. So it's that connectivity issue. It's what got Target in trouble in that well-publicized event. They had very good IT internally. They had one outside vendor they were using that did not have in place what was necessary, and that's where that bad actor got into Target, was through that third-party vendor. Well, in local government, we use a plethora of those, and so there's a concern. We're concerned about a broad attack affecting multiple membership within our program through shared networks. Think of all of the various state agencies that you interact with. Vital statistics, dog licenses, hunting and fishing with DEC, court systems, all the reporting that goes through OCA, all our annual financial reporting through the state controller, CHIPS, highway funding reporting to DOT. So we have all of these avenues going out to the state government exclusively, and all of those are a potential avenue in for a bad actor, because the states and federal government, I mean, we've all seen stories, the Pentagon's been a target. You know, the largest agencies in government in our country, and many of them have been penetrated despite their best efforts. And so we interact with all of them as a county. You interact with all of them. And so all of those are potential exposures that could affect multiple members at a single time. That's a concern for our program. That's why the reinsurance treaty is so important to us as a program, because we could have 40 members impacted with a cyber event one day at one time. Next slide, please. So the insurers and the reinsurers are driven by fear of the unknown. They like to understand the risk that they are insuring, because at the end of the day, they want to be profitable, let's face it. At least in our program, we don't have a profit motive, but we need to be financially stable so that we're there year after year for you. And so fear of the unknown is not something that insurers are generally comfortable with. We're still not sure, will we continue to be a target? Probably, maybe not, but likely. There's been perhaps a bit of a lull in the past year. I've seen some conversation around that. What do you think is going on? It seems to have been a quiet year in terms of cyber attacks on general purpose local governments in any event. Part of the answer, interestingly, might be the Ukrainian war, because much of the bad actor hacker world is based in the Soviet Union, and they're focused right now on attacking Ukraine and Ukraine back to the Soviet Union. And so some of their attention and motives, etc., have been directed in that fashion. But that's not to say it's going to continue. And there's certainly plenty of bad actors out there in China and North Korea and elsewhere, government-driven, that I think likely means we'll get back to being a target if, in fact, we have been going through a lull. The demands and threats will escalate, very probably. So we've seen it's just been a steady upward. If you look at a graph, the ransom demands started very low. They were 10,000 or 20,000. You paid the ransom. They gave you the key, the code. You got back up and running, and they went away. That happens very seldom today. So the demand amounts have increased exponentially, and the nature of the threat has changed, because now it's not just pay us the ransom, we'll give you your system back, but the threat is, and if you don't, we're going to publish all the information that we've acquired out to the world. And so all that personal information, that's, again, an additional exposure. So it's not just paying the ransom, it's if we don't, or sometimes even if we do, they're going to publish the information to the World Wide Web. So the degree of exposure will continue to grow. Next slide, please. This is where we're going to focus a lot of our attention and energy in the next year or two, which is, I call it IT hygiene. Complex passwords, MFA, encryption, layered security. These are all areas where there's going to be a lot of work done. Fortunately, through the efforts of NISAC, I think there's a lot of state resources that's going to be coming counties' ways in the short term that's going to help with this, maybe even providing funding that will allow you to put a lot of this in place. But this is obviously going to be a focus going forward. Next slide, please. This is just every graph you look at. This is from Marsh, which is one of the 2 or 3 largest brokerages in the world. Those are the cyber premiums quarter by quarter over the last couple of years. And you can see, if you look to the far right, that 100% increase year over year, likely to continue. unlikely to calm down in the short term. Next slide. So as that slide showed, cyber pricing, 100% increase. That's what we saw in our reinsurance treaty. It was even higher than that, actually. So I think that's a trend that's going to continue. The frequency and the severity, particularly of the claims, was the leading factor. Ransom payments frequently exceeding $1 million. Additional claim payments for business interruption or data exfiltration. We don't have a business interruption element to our exposure necessarily. So that's perhaps the only good news with respect to local governments, as contrasted with a Target or a Colonial Pipeline or somebody like that. Underwriting scrutiny increasing significantly. Concerns about systemic exposures and accumulation of risk increased, and all the insurers are tightening their capacity, taking a hard look at it. And again, a focus on both healthcare, education, energy, and public entities. We are a target. We have to recognize that we are a target. If you picked up the Wall Street Journal today, this happens every day. Lead story: ransomware attack strikes Los Angeles public school system. We don't even know the size of that yet. They've not published what the ransom request was. So just when we think perhaps we bought some time with the Russian-Ukrainian conflict, here's the second largest school system in the United States, I'm sure, with very sophisticated IT and protections in place, and they get hit yesterday. And of course, the timing of these is always horrible. They pick the opening day of the school system to attack. So the frequency, severity, unlikely to go away. And as this article, if you get the chance to pick it up and take a look at it, points out, there have been 26 school districts already this year. All right, so where are we? We're into September, so 2/3 of the way through the year. There have been 26 different school districts hit with ransomware attacks, and in 24 of those 26, there has been a release of sensitive data. So this has compounded our problem. It's not just pay the ransom will go away. It's the concern about now publishing that data. And then we have potential third-party exposure, notification that we have to provide, credit monitoring service that we may have to provide. And then ultimately, perhaps the risk that there is some injury to those third parties, and we have to compensate for that. It makes the insurance that you purchase critically important, essential, and necessary, despite the fact that the costs are increasing in ways that make it very difficult for your budget to accommodate. But that's our challenge going forward, not likely to change. So I'll just conclude with the general thought that if you think about insurance, it's the spreading of risk. Insurers hate more than anything else uncertainty. If they can figure out what the frequency and severity will be, they'll price it accordingly, and you'll be able to procure the coverage. Right now, they're not comfortable with that, and that's why it's been very difficult, particularly in higher limits. So once you start to look for higher limits above $1 million, it becomes harder to find and much, much more expensive in those higher limits because they're not comfortable with the severity aspect of things. Is that information going to get published? And if so, the severity of the claim, it's not just the ransom demand, but it could be those third-party costs that can grow exponentially. And so there's the problem. They're still not comfortable. They understand the risk. That's why they keep asking you more questions, additional pages in that application every year. They're going to look at, look at you individually. All right, they don't what's in place in one county, not likely to be in place in another county. So they may have county clients. We have 940 members in our program. As the limit requests get higher, they want to look at you individually, because right now the understanding is that our IT hygiene varies greatly from government to government. So they're going to want to look at you individually. And premiums likely to remain high, probably not coming down, not in the short term in any event. But hopefully coverage will remain available. We're committed to doing it in the NYMER program. And I think if we focus enough, as we've historically done, on good risk management, and the cost of putting that in place is something that we can afford, and there is an understanding amongst local government leaders that this isn't an investment that we have to make, then I think we will get our arms around the cyber exposure and be able to underwrite it in a predictable, stable fashion going forward. And that's certainly the hope in our program. So let me stop there and see what might be out there in terms of questions.
Thank you, Kevin. This is Mark Levine again, the Deputy Director of the New York State Association of Counties. We appreciate you taking the time to boil down a very complex issue here in understandable terms for the local governments and counties who are faced with trying to procure this insurance, cybersecurity insurance, in a very complex and increasingly complex context. So I'd like to remind our attendees today that if you have questions, you have an expert in municipal insurance with us today. So if you have a question, please type it into your question panel on the webinar dashboard. Kevin, I have one question. I've got a couple questions here, but what's the role of the state's insurance regulators that sit in the Department of Financial Services? Is there a role here?
Well, I mean, I would generally say we are a very heavily regulated state when it comes to insurance. I think our insurance department has been a leader in this cyberspace so far. But everything we do, whether it's a change in our policy or our pricing, has to go through the insurance department. I think there is an understanding at the department about the challenges that are being presented in the cyberspace. And if we have to start doing things differently going forward, hopefully there'll be a partner for us. But they've been learning the area as we've been learning it. You know, we all started as neophytes when it came to cyber. Just understanding the lingo and the terminology is a challenge. As you know, that's one of the nice things about your primer for local government leaders, and I would recommend everybody should read that. Everybody in leadership in county government should read the primer, if only as a resource to get comfortable with the language and the lingo so that we can start talking at the same level. Well, I think the insurance department has been doing that as well, getting up to speed and trying to understand what's happening out there in the marketplace. And hopefully they'll be a good partner for us going forward as we try to stay in this space and provide the best coverage we can for a reasonable price.
So the governor this year has announced the creation of a joint security operations center, and the purchase, or the state is going to purchase endpoint detection and recovery solutions for counties and the largest cities in the state. Now, if all the counties in those large cities take advantage of that endpoint detection solution, do you think that insurance companies and reinsurers might get more comfortable in those entities' abilities to manage risk and maybe provide more coverage or lower premiums as a result of that?
I think that's the hope, Mark, and I don't see why that wouldn't happen. I don't know if they're going to lower the premium, but the capacity might be increased. And I think that's the bigger challenge right now, is to get enough capacity out there so that if you are unfortunate enough to have one of these events, if you become the target, that you have enough capacity in the insurance you procured to make your county whole. So I think that's the long-term hope, and I think this is an excellent first step in doing it, and I hope it ends up moving down beyond the counties to the other levels of local government, because their need, although maybe of a smaller scale, is certainly as great.
Thank you. There's been discussion and attempts at creating a pool purchase for cybersecurity insurance. Yes. Are other states or any entities that you know of, have they been able to launch a pool purchase of cybersecurity insurance yet?
Not that I'm aware of. And I think it goes back, I hope I mentioned this somewhere along in my remarks. There is a sensitivity within the insurance carriers. And again, I know the NYMER program. I'm certainly not an expert in the others, but I understand their thinking, which is this need to look at each entity individually. And so that's a friction point when you try to do something as a group, and that they want to just break you apart and look at each of you individually, or they're going to take the lowest common denominator of the group and assume it's the case throughout. That's the way they would approach it. So that's the challenge with a pool purchase right now, is again the uncertainty and their tendency to stay away from that until they understand the risk. To the extent we've had members now under our current Beasley policy, this is a very narrow experience, but it's one I can share. If we had an entity that was purchasing the lower level, 250,000, and wanted to go to $1 million, we've had at least a handful of those just in the 3 months of our new treaty with Beasley. Beasley wanted to look at anyone purchasing a higher limit individually. They call it facultative. And in some cases, they were unwilling to write that additional coverage given the size and the complexity and their lack of familiarity with that entity right now. Now, as it goes along and you have a relationship that builds up, they may become more comfortable with you. But right now, that's the reality. And so it's been difficult for local governments who've had their cybered with one company and tried to leave it. Maybe pricing wasn't something you were comfortable with, or capacity. If you tried to go somewhere else, you probably had no luck whatsoever because you were brand new to them. And again, they're going to stay away from that uncertainty. That's the nature of the insurance business. Uncertainty drives up costs or drives them away or creates a chasm between you and them. And so that's been the problem in the short term if you tried to jump and change carriers.
Right, that's the whole key here, right? Is the uncertainty in the risk. So what do you predict, or are people talking about ways to reduce that uncertainty? Cybersecurity and the hacks, it's such a complicated area in general to secure for a county and municipality. What will make an insurance company more comfortable with taking on that risk?
Well, I do think some of the products and starting with endpoint protection is probably an excellent place to start. First, we have to figure out how many endpoints there are, and I think the state would be the first to admit they're not even sure that they've purchased enough through their carrier. You would know who it was, Mark. Probably I can't remember one of the big names, but they had to take a guess about how many endpoints we're talking about amongst 57 counties and the 5 cities. So it's going to be just a gradual process of understanding the scope of what's out there in our IT systems, and then acquiring and paying for all of this and it's expensive stuff. I mean, all of these products are not cheap. hopefully maybe down the road we can bring the leverage of our group into play and drive those costs down. And obviously the state doing it on behalf of the counties is a good first step in that direction.
Well, I want to take this opportunity, Kevin, to thank you very much for your time and expertise this morning. For the members of the associations, the NISAC, NICOM, and the Association of Towns, all participating on today's webinar. I encourage you all to sign up for the social engineering webinar that will be held next week through the New York Municipal Insurance Reciprocal. And there'll be a registration availability on NISAC's website under the cybersecurity section of our website. And any closing thoughts, Kevin, before we end today's webinar?
No, Mark, thank you. I would just say, you know, we're kind of all in this soup together. It's been great working with NISAC. I mean, I've been talking, Mark and I talk almost every day now because we're doing our very best to identify ways and means of helping out the membership. But we're committed to doing it, and just please stay in touch. And I think we'll come out the other end, and hopefully sooner than later.
Thank you, Kevin. And thank you all for joining us for today's webinar. Have a great day.